Hello, everyone. Welcome to the stock specific class here for Thursday, May the 6th. We talked about that last Tuesday. We talked about the market looking like it was going to decline. It's kind of been back and forth, and it's been back and forth today as well. We'll take a look at the charts and kind of see what's going on there before we get into the specific stocks. We're going to finish up as far as the training today. We're going to finish up with the 21 scans, and there's just a couple more that I want to just kind of point out and show you. And then next week we're going to get into some specific candlestick formations. Spend a little bit more time on those. We talked about reading price action. A lot of that has to do with reading those candlestick formations, and so that'll be some good training starting next week. As far as the direction alerts. With the market pulling back a little bit, these indicators have come back. What that tells me is it tells me that we're not in an overbought condition, but that doesn't always necessarily mean that we're in a strong trending environment as far as the charts are concerned. And we are kind of in a situation here, and I've talked about this a little bit over the last few weeks, where we really could go either way. It's possible the market kind of charges forward from here. It doesn't have a bigger correction, and then we start to get those overbought signals. So it could be that a larger correction comes later on, or we could slip a little bit. I think based on where we're at right now, if we do drop, I don't think we're going to have a really big drop or big correction. And I think that would be really good to really allow the market to charge forward after that. I'd like to see just a little bit of a decent drop down a little bit further, get a little bit of fear in the market, concern in the market, because it's a little bit complacent right now, and then start to charge forward. One thing that's interesting when you look at a lot of individual sectors, if you look at financials, you look at energy stocks and industrials, and some of these, the trends are a little overextended. But then you go in and look at technology stocks, and you look at electric vehicle stocks or some of the clean energy stocks, and they've been beaten down over the last few months. And so the reason why I say I think I'd like to see a little bit of a sharp sell-off that can reverse is it would bring down some of those financials, industrials, and energy stocks a little bit, and hopefully it would spark buying that could go into these beaten down areas, and we can ride some of those trends up. We can get much bigger returns on some of those rebounding, especially if kind of the risk-on type appetite comes back in. Now, another thing you hear me talk about a lot is that markets don't necessarily have to pull back to alleviate overbought conditions. They can move sideways, and that's a little bit of what we've kind of been seeing here. We'll look at, like I said, we'll look at the charts here in just a second. We've seen a little bit more of a sideways move over the last couple months, and those are not the most fun to trade in. You don't make a lot of money in sideways trends, either whether you're bullish or bearish. There are ways you can make money in sideways trends, but usually they involve working twice as hard for half as much money. We definitely liked movement, up or down, but movement as traders. Let me scroll down here to Brett. Brett is backed up. We were in that extreme range. I pointed out that we were kind of trending in this direction to move back towards the high area. And then sentiment is backed off a little bit. We're still in the high complacency. That's why I'd like to see a little bit of a market sell-off that pushes us back towards that trending area to give it some room to run if the market starts rallying back up again. You don't want to immediately go bump into these extreme ranges right away. All right, let's go over to our watch list here. This is what I was talking about as far as, you don't have to, a lot of times you can pull back within your trends. You can see when you have some of these decent pullbacks, you can get these nice little breakout moves. This last one really is extended for quite a while, but then we've been more sideways through here. Now this is a consolidation. It could be a consolidation that could lead to moving higher, but if you've noticed, with particularly as it relates to the stock specific class, we haven't gone to there's not too many that we end up finding. At least I end up finding that that I really like. When we've had these pullbacks and we start to run, you know, there are some of these classes where I'm going through 10 or 15 different stocks, and they're different stocks, it seems like, every week, because there's a lot more of these stocks participating. Now, I think that's important to point out, though, because this is a lesson that I learned as a trader a little while back, which was, you know, when I go look for stocks, if I have to spend a lot of time trying to find trading opportunities, meaning when I'm looking at the charts, I can't find stocks where I love the chart or I love the price action. It doesn't just jump out at me right away. If I really have to go through, you know, tons of watch lists and to find trading opportunities, it's usually a sign that I shouldn't be doing a lot of trading. There's a reason why I'm not seeing a lot of great patterns. It's because a lot of stocks aren't in position to move. And so on the flip side of that, if I'm pulling up a watch list and within the first 5, I've already found great patterns to trade or something like that, you know, that tells me there's a lot of stocks that are in good trading positions, and a lot of stocks could be participating in a rally. So it's just a numbers game at that. You know, am I trying to find the 2 stocks out of 1,000 that I could trade, or are there 800 stocks out of 1,000 that are great trading opportunities? What environment's going to give me my best chance of making money? Well, obviously, if you've got 800 stocks out of 1,000 that look great, it doesn't matter what you're going to pick. You're likely to make money. So your chances of making money go way up. So you know, when if you start to tune into some of these classes, and we're going to the stock specific class, and we're finding 10 or 15 great patterns and great sectors to trade, that's a really good sign. All right, so now in the near term, though, there's still that potential that we could pull back a little bit deeper. A lot of that comes from looking at some of the other indexes that have pulled back a little bit further. If we look at hold on here, let me switch this over here. If we look at well, the DIA has broken out of its sideways range, and see that's kind of the tricky thing here is are the Dow stocks leading the way higher? Meaning they're gonna start bringing we're gonna start seeing the NASDAQ rally and the Russell 2000 start to rally, and they're gonna start following the Dow stocks, or are the Russell and NASDAQ leading the way down, and the Dow is the last one to try to before it rolls over? They've already started to roll over and drop. Is the Dow going to end up following? I will say that typically the Dow isn't the leadership group within the trend. Usually it's the Russell 2000. So when the Russell 2000 starts to rally, you start to see the other indexes follow. When the Russell starts to roll over, usually you start to see the other indexes follow. So I would tend to lean more towards not trusting this breakout in the Dow, that maybe it's the last to start pulling back or rolling over. But again, there's no absolutes in trading, and it could be the other way around. But if you look at the Qs have dropped pretty dramatically. They've been hit pretty hard. There is a possibility, though, that it's created. This could be wave A, wave B, wave C of an ABC correction. Here's an ABC correction back here: wave A, wave B, wave C. And if we get a real strong bullish reversal day, higher volume, and market really seems to get excited again, maybe that, and start to see money pour into the NASDAQ. The NASDAQ is important because it's often an indicator. The NASDAQ and the Russell 2000 are often an indicator of the risk on trade. These stocks tend to be a little bit more speculative. Not all of them, particularly NASDAQ 100. Those are stable, pretty stable NASDAQ companies. But you get into these smaller tech companies, a little bit more speculation. When they're rallying, it tells you that the professional traders are willing to take higher risk. They're going to make more money with those stocks because those stocks have a better chance of doubling it, going from $15 to $30 or something like that. When they're a little bit more defensive or cautious, this index is going to, and the Russell 2000 is going to have a tendency to drop. And so we're still seeing that there's not a big risk on appetite right now. And so we'll see how that, we'll continue to monitor that, see how that develops. If we go to the Russell here, again, I'm still looking at the possible head and shoulders pattern right here. If that is a head and shoulders pattern, we should at the very least get back down to the base of the head, or it should break through that. But you could make the argument that if we were to rally up from here, you do have a little bit of higher high, higher low behavior, and maybe if it breaks out, this was your consolidation through here, and you're starting to go again. So, not a lot of real strong market direction right here. We can have a ton of confidence in where things are heading, and I would tend to lean a little bit more to the bearish side. The VIX was moving up a little bit today. So we have a situation where the S&P 500 is up and the VIX is up. So you can see the S&P 500 index up here. So again, that would make me a little bit more cautious that why are they hedging? Probably a little bit concerned, maybe not trusting the rally, probably the rally in the Dow. They're not trusting that as much. We'll see how that kind of plays out. All right, that's kind of highlighting the conditions we're in. Let's take a look at a couple of individual stocks. Like I said, I didn't see too many that I really liked. Another thing too, in the sector rankings, this time of year, it's the allergies just kill me. But usually when you're in a really kind of risk-on environment, you're going to see computer and technology at the top. You'll see a lot of times you'll see kind of the medical biotech companies near the top. The consumer discretionary, things that that you'd see a lot of those more near the top of the list there. What I'm seeing at the top of the list are a little bit more defensive stocks, and that there's nothing new there. That's kind of in what's been going on over the last few weeks anyway. I got a couple under the retail sector though, and I think I talked about these. At least one of these I know I talked about on Tuesday. But L Brands right here, 95 strength rank. Let's switch this on to signals here. It's starting to kind of consolidate through here. It looks a lot like what the market, like the S&P 500 is looking like, where it was trending up and then it's kind of moved a little bit sideways here. If the markets do end up breaking higher, this could end up breaking out with it. You could wait for it to go back to a buy signal, although the buy signal is near the top of this breakout area. So I would probably look for the breakout, get that little bit of extra confirmation. A better pattern, I think, is that I liked in that same sector. It's down a little bit further. A&F, Abercrombie and Finch, 91 strength rank. but it looks like it's very close to breaking out. It's had this had this run up right here. It's consolidated. Looks like it's going to go back to a buy signal today. It's right at that breakout area. You can maybe give it another day to see if it does end up breaking out, because it could stay in that range. It could come right back down, stay in that range for a little bit longer. But that's a nice little pattern there. I'm going to drop down. I mentioned that oil has been kind of surging and trending pretty strongly. There's a couple of the energy stocks I found in the hold range. One was this, let's see if I can find it, NBR, 96 strength rank. Now, what I liked about this, you say, well, this thing's, come all the way back down. This is one, we're waiting for it to go back to a buy signal anyway. But if it kind of keeps trending up from where it's at, what I like about it is it could be forming one of my favorite patterns, as many of you know that have followed these updates for a while, which is a cup with handle formation. You get these run-ups in the stock. They pull back, and then if you get kind of a rounding correction where it comes down, it kind of bases down here and then starts to come back up, and you get into that right side of a bowl type look, you can trade the stock up to the top of the bowl if it goes back up to the top of the previous high. That's one trade, is you can catch it early. Now, not all these end up going up. And so this would be probably dependent on the market kind of rebounding and continuing to move higher, obviously. But if you can trade that up, and then a lot of times you'll get back up to this previous high, and it'll consolidate along here for a little bit. And I usually don't like to hold it through that, because it's just moving sideways for a few weeks. And then if it breaks out, we call this a cup with handle pattern, because there's your cup, there's your handle. And then when it breaks out, you have a minimum target rule of thumb where you take the distance of the top of the bowl to the bottom of the bowl and project it upward. And that's the biggest trade out of these. But there's, like I said, there's different stages that could be developing. And subtly, what I'm noticing is that you kind of have the lower highs, lower lows through here, lower low right here. Then you had kind of an even high, and you've kind of got an even low starting to develop. Maybe that's a little bit lower low right there. But if this continues to move higher, if it goes a little bit higher from where it's at right now, you'll have a higher high. You can look for it if it pulls back again to start giving you higher lows. And as soon as it starts acting like that, you could be starting to move back up. So this one might have a little bit more work to be patient. I might have to be a little bit more patient on it. But that's what kind of jumped out at me, was it looks like it's kind of in that early stage, and then you could, if it does start acting like that, your first minimum target is the previous high. It should work its way back up to that previous high. Then you have to kind of worry about that consolidation. You don't usually want to, well, unless you're really long term and don't mind waiting. But usually I'll break this up into different trades. Trade the move up, and then trade the breakout. And if that broke out and that was the bottom, you could look at the base, the top of the bowl to the bottom of the bowl, and project that distance upward. You can see where that really gets exciting if it can work its way back up there. All right, and then another one in that list was SM Energy, 93 strength rank. SM is the ticker symbol. And this one's just what we call a pennant pattern, or flag pattern, not pennant pattern, flag pattern. This looks like the flagpole right here. There's the flag. Now this one again, you could wait for it to go back to the buy signal. But if you notice, it's gone back to the buy signal near the top of the flag, and then come back down. So I'd probably look for the breakout on that one. And then again, if it breaks out, you can take the top of the flag to the bottom of the flag, project that upward. That gives you a minimum target, not the target, but a minimum target of what to expect. And so that's kind of a nice little formation there to keep an eye on. All right, let's get into some scans. And the reason why, I didn't see a lot of great stocks that I really would want to jump into on some of those other sectors. But I also wanted to save a little bit of time as we go through the scans. We can look at some individual stocks within scans. Maybe we find some opportunities there that we could consider. On Tuesday, we covered more of the fundamental scans. Last Thursday, we started with the scans, and I kind of went over more the kind of my favorite technical scans. And we're going to finish up with more of the technical scans today, and then that'll wrap up the 21 scans. But again, for those that are just, I'm going to switch this back to candlesticks. For those that are joining kind of for the first time, when you log in, you can go under your screener tab up here. And you should be able to see this little tab that says 21 scans. If not, you might need to add it. You might need to contact the office and see what you need to do to add that. Now, the first one I'm going to cover on this drop down is the year change 90. So come down here, right kind of in the middle right here, you see year change 90%. These are stocks that are, it's a real simple scan, stocks that are up 90% year over year. And you can see with the bullish run we've been in, there's 1,600 stocks in that scan. And that can happen when you have just one scan criteria or something you're looking for, and especially this one. We've been in a pretty strong bull market over the, when you look at this, we're kind of past the depths of the sell-off last year. Remember, we had that real sharp sell-off. We came all the way back from it and broke out and moved to new all-time highs again. You have a situation like that, you're going to have a lot of stocks that are up 90% year over year, because almost everything dropped dramatically before that run. So that's not too surprising there. Luckily, again, it ranks it by strength rank, so you're looking at the higher strength rank first. And again, you can kind of create instead of going back and forth, you can click on the top stock there and then put it in your scan. Find 21 scans on this drop down menu right here, and then the one you're looking at, or we're looking at right now, which is the year change 90%. And I can scroll through them all just by clicking the right arrow right here. Goes down the list. If I want to go back up the list, I click on the left arrow there. This is one that, you say, well, boy, this stock looks like it's come back down. There's a lot of them that are like this. They're still up 90% year over year. This stock is still up, but it's kind of gone through a run up and then it's come back down. It could be kind of forming that bowl I was talking about. Here you have lower highs, lower lows. Now you had a higher high right here. And what I would be looking on this is to see, it's sold off the last few days, but if the market rebounds, and a lot of these are probably dependent on what the market, the indexes do, but if the market rebounds and we start rallying from here, it should give us a higher low. And there's your first signal of a possible trend reversal. And you could have have the early stages of a new uptrend. And what's nice about some of these lower price stocks is that maybe with confirmation, it gets back up here to $4.50 or something like that, or you wait for it to go back to a buy signal or something like that. Whatever your entry technique is, it could double in price just getting back up to the previous high if it's working its way back up there again. But this stock follows, and I don't know what they do. This is over the counter though. This is one that probably might not be in your normal trading platform. You might have to. I didn't catch that the first time I went through it, but that's nice. That's a nice little pattern there, though. This is kind of the same thing. It's possible this is kind of forming that bowl-shaped move. It needs to probably go back up and make sure that's a higher low right there. Maybe even wait to break out above here to make sure you're getting a higher high. It's acting like an uptrend. But that's an OTC one as well. This one's still trending down, so I'm going to skip over that one. This one looks like it's likely to keep going down. Lower high right here, lower low, looks like a lower high right here, and it looks like it's about to possibly break to a lower low. Leave that one alone for a little bit. This is, by the way, this one's one of the big Bitcoin service type companies. I don't know exactly what they do. I never know exactly what a lot of these companies do because I care more about the chart patterns than I do but I do know that it tends to move with the movement of Bitcoin. Although not a whole lot recently, but Bitcoin's last time I checked, Bitcoin was down today, but it had been rallying a little bit. This has already kind of rolled over the stock. Here's an energy stock. This one looks pretty nice. It's getting a little overbought, but remember, it can stay in that extreme range for a little while. And this is definitely one of the sectors that's been outperforming lately. You have a little bit of a consolidation in through here. Had a big consolidation right through here. By the way, just to show you that rule of thumb I always talk about, where you take the bottom of the base of the top of the sideways trend there and the base of it, you take that distance and project it on the breakout. Look where it started to move sideways, right at that, about that same measurement right there. Here's another one. Let's see, there's a lot of these over-the-counter stocks. Yeah, that one. Here's an example I talk about all the time. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. In this case, it looks like it's breaking to the downside. That is the higher probability move. Doesn't always do that, but again, what we're trying to do as traders is put ourselves in the higher probability outcomes or the possible outcomes. Manage probabilities. That's a key to trading is managing probabilities. And by the way, that's not only managing probabilities is a real broad statement, but it has to do with managing the probabilities of the charts that you're selecting, the trading environment you're in. I mean, all this analysis of these indexes is we're trying to analyze the probability of, because if the indexes are more likely to move up, the individual stocks are more likely to move up. And then you can carry that out even all the way to your money management. How how are you, managing your trades, and are you managing those probabilities through your trade management as well and your money management? And one thing I do, I don't necessarily say this is the best way to go. There are people that could probably argue that, but I when I'm in a higher, what I feel is a higher probability trading environment, when there's a higher probability that the market's going up, again, it doesn't mean it will, but when I feel like I'm in that higher probability environment, I tend to risk a little bit more in my trades. I tend to be a little bit more patient in my trade management, meaning maybe I have a little bit wider stops to give the stocks. I don't get bounced out of some of these sideways moves, whipsawing moves, to have a better chance of riding that trend. And then when I'm not real confident in the direction of the market, I tend to reduce the amount of money I'm putting into trades and what I'm risking in the trades. And I might be a little bit more, I might not, I'll be a little bit quicker to take profits or something like that on the way I manage my trades and things like that. So now, again, I would need to point out that doesn't mean that I'm always right. It doesn't mean that it always works. Sometimes I'll take on more risk thinking I'm in a higher probability trading environment, and you get some news out of nowhere that reverses everything, and you take a bigger hit because you increase that risk, And so it's just part of the trading game you have to deal with. All right, let's switch to another scan here. This one is go to our screener right here. This one is the ETF Bearish Extreme right here. Last Thursday we did the ETF Bullish Extreme. Now these are looking for possible trend reversals. Now, usually I would be more apt to look at this as the market is selling off. Because if we're expecting a little bit of a pullback in the indexes, like I said, the indexes aren't overbought right now, but they are a little extended. We've been trending up for a little while. If we start to sell off some more here, then these bearish extremes can become even more extreme. So usually I like to see them the market actually start selling off, and then you can look at some of these bearish extremes trying to find that bottom. Again, these two scans are more geared towards trend reversal trading. You're looking to try to look for trend reversals. There's only 20 stocks in here, and some of these, and what I would look for is kind of what I was showing you on some of those others. Do I see some of the signs? Because obviously these are going to be beaten up. Do I see signs that they're starting to roll over, or does it look like we're starting to move into the right side of a bull? It doesn't always have to be a bull. It could end up developing an inverse head and shoulders pattern where it starts moving down sharply, has an impulsive move down, impulsive move up, and then you get a corrective move, and maybe you're getting those early signs of now you're getting higher highs, higher lows. It could be more of a V-shaped bottom. Now this one still looks like it's trending down, so there's, I'm not going to just say, oh, I'm guessing that it's going to start going back up. So I'd skip over that one. You could also find stocks that could be close to being done, and maybe they're in a C leg of an ABC pattern. That's what this looks like. You had this big run up. That looks like wave A. A little bit of a bounce right here for wave B. Could be in wave C. But it doesn't show any signs that it's reversing back up. The next thing I would look for is you got impulsive down right here. Does it suddenly reverse up and an impulsive move up? And then after that, do you get a little bit of a corrective move? That's kind of the early type signal of a possible trend reversal. You could even wait off of that for it to go a little bit higher to give you now that higher high, higher low. Same with this. It still looks like it's pulling back. I don't know how that ended up in here. This is not an ETF. And it's not. It's definitely not. Oh wait, we still need. Oh, maybe we're looking the wrong. We didn't change this to ETF Bullish Extreme. Okay, that will make sense then. That's weird. I thought I was in there. All right. Yeah, that was still trending on. This one, when you see kind of these big gap, it's gapping up or down every day. This is showing you there's very low liquidity. These are very dangerous to trade because it means that a lot of times you're one of the only ones buying or selling, and you could be causing it to go up or down based on your buying or selling, and it's just when you don't have a lot of liquidity, there's a lot of headaches, not usually worth messing around with. So that one's still trending down. This one looks like it just was started. When you have these really big, it just means it hasn't been around for very long. So it might not even have its 6 months worth of chart there to show you. So that one looks like it's relatively new. I'm not expecting to see too many of these starting to reverse just yet, just because of the current market conditions. But if the market does sell off some more and then start to reverse, this could be one that you can take a look at. All right, let's move on to another one here. Let's go to LT up 50% volume. This has 91 stocks in the scan. Again, you can see that under the search results right here. These are stocks with a buy signal, have a long-term trend of up, and have an increase in volume of 50% from the prior day. Volume tends to act as an accelerant. Any increase in volume is an indication that the uptrend should continue. And make sure I get this in the right screen here. LT up 50% volume. There we go. Big Five. By the way, we went over Big Five. This is one stock-specific recommendation a number of times back down in here. It broke out, and then it took off. And it took off in a big way. So, I mean, these are it would make sense. It was a strong stock in a nice trend. Had gone from where it was in a hold range or waiting for it to go back to buy, and it kind of exploded. So, and it still looks like, I mean, it's still going. And now I wouldn't buy into it right here because you're in the far right side of the extreme reversal risk, but that's the type of move you want to try to capture. Some of these are in kind of that extreme range. I wouldn't be. Let's see if we can find one that's coming out of a consolidation. Oh, this one's pretty good. Well, I'd be a little bit. I was expecting this to be a little bit more. You know, you could make the argument this is a ascending triangle formation here. But if you truly connect the tops like this, where it's slightly going up right here and more sharply rising right through here, This could be considered a wedge formation. These can show up near the top of a trend. Now, the key to this would be if it breaks that support line. That'd be very bearish. Obviously, if it can break out above here and clear the tops of that, it could be very bullish. But a rising wedge formation is kind of a little bit more of a bear. So that kind of seems like it might be more, if you connect the absolute tops there, it seems a little bit more like a wedge formation. Now, if it breaks below that, that'd be a good shorting signal there. See how that one plays out. This is not too bad because this one looks like it's kind of breaking out a little bit here. That's a little bit more of a ascending triangle formation. It's kind of a sideways that you kind of bumped a little resistance up here, but you have the higher lows through here. But triangle patterns show you that there's pressure forming. And then when they break out, it's kind of like an explosive move. The buying picks up, and it's almost kind of self-fulfilling prophecy type situation, because a lot of traders look for these, and so when they break out, what do you do on a breakout? You go buy. And so it you know, it's like if enough traders recognize that pattern and it breaks out, it's the buying comes in and pushes it up. And that's why they work, is because there's a lot of people that recognize that and trade that way. So that's why it's good to know what those patterns are, so you know what people are, what particularly professional traders are looking for. All right, let's skip down to, let's try another one here. Penny volume. This is for all you penny stock traders. I'm not a big penny stock trader, and most of these I would assume are going to be on the over the counter exchange, which means you may not be able to trade them in your normal brokerage account, or it's a little bit, or in the normal exchanges in your brokerage account. There might be and that's right here, penny volume spike right here. Now, one thing I would caution you on these, because the criteria for this, let me bring it in, set it up here on the scan. But the criteria for this is that it's looking for stocks that are trading between 10 cents and $2. The 20-day average volume is 100,000 shares or greater. They have an increase in volume over the prior day by 100% and have a buy signal. What you have to be a little bit cautious about is that a lot of over-the-counter stocks, and those of you that trade them would already know this and probably would be aware of how you deal with it, but they can be kind of those pump and dump schemes. You know, you've heard of the Reddit crowd. People have kind of accused the Reddit crowd of being a pump and dump retail operation, where you get people that are hyping up certain stocks, getting people to buy in, and then they sell out after they run the price up a little bit. And because you're getting these surge in volume as part of the criteria of this, it could be possible that that's what's taking place. But some of these can move, you know. A lot of times when people trade penny stocks, they're trying to, they don't care if it's a pump and up, because they're trying to see if they can make some money on the way up, you know, while that stock is being pumped up. And so they usually have a trading plan that's kind of a get in, get out. You know, you get in at 78 cents and get out at $1.06. That's a pretty good return for, you know, a few days. That was a couple weeks right there or something like that. And that's kind of what they're trying to accomplish. Let me put the volume bars on here so you can see. So it has a really big volume spike. This one's getting in the extreme reversal risk range, but you don't worry too much on those, because they can stay in that extreme range for a little while as they really kind of shoot up in price there. This scan, I forgot to see how many stocks were in the scan, but we'll go through just a couple of these. You can see that most of these are trading on the over-the-counter exchange, like I said. But I think you can find a few that are on the NASDAQ or the Amex or something like that. And you can, I'll take the volume bars off. I just want to show the volume bars to show that part of that scan is looking for that volume spike. Here, though, you have, it looks like you kind of, here's your low. You had lower highs, lower lows through here. This is a critical area right here to break out of. But since then, you've kind of had slightly higher lows. This could break out of here. It might run up to this previous high up here. I'm assuming that most of you aren't penny stock traders, though, so I'm not going to spend too much time on this, but just want to go through a few stocks and show you that. Now, the bonus scan in the 21 scans here is all the way at the bottom. SG trend up, volume 100%. This is looking for stocks that are $2 or greater, ranked 40 or greater as far as the strength rank. These stocks have had their short-term trend go from down to up in the last day and have increased volume over 100%. So now let me pull it up here, make sure I get the right scan in here. So the short-term trend, again, is this. Here's the ST trend. I did a training on ST trend. I can't remember if it was last week or the week before. I think it was not this last Tuesday, but last week's Tuesday. I think I went over ST trend. But it stands for short-term trend. And so basically what you have is a stock has gone from ST trend down to ST trend up. So you're assuming it's been dropping to go from down to up. And then you're looking for that spike in volume. You want the increased volume over 100% from the previous day, because that could be telling you that it might be starting to. So the price is moving from down to up, and you get that spike in volume, which is you're assuming is going to be buy volume, which could maybe lead to the stock moving higher. Again, it helps if you can add your chart analysis and other price action analysis along with it to find which ones are more likely to start moving up. Here you had a situation where, let's go to candlesticks here. And also remember, with all these scans, they're based off of today's data isn't added in yet on all the stuff on Traders Pro. It updates overnight, So there was your volume spike yesterday and going from ST trend down to ST trend up. Now it's back down a little bit today, but this is not a bad little pattern here, because you have, here's your impulsive move. This is more corrective, more choppy, more sideways. This is impulsive. And this looks a little bit more impulsive down. You could make an argument it's a little bit corrective. So this is it's not a real clear movement here. It's hard to tell if this is another pullback. Like the pullback, this move, is that a pullback within the uptrend? Because it did end up having a higher low right here so far, or is it impulsive up, impulsive down, and you're going to get corrective, and then you're in the midst of a trend reversal? You did have a little bit of an impulsive move up right here and a little bit of a corrective move right here. So I would look at if this is a corrective move, this is A, B, C, and here you have impulsive up and it's corrective right here. It could be that, and this is going back to Elliott wave analysis, the 5 waves. This could be wave 1 of a new uptrend. This corrective move could be wave 2. You could have wave 3, 4, 5, or something like that. It could be starting to move back up, and that would support the higher low right there, higher high acting like the uptrend there. But there's another possibility. If this is a trend reversal and this is impulsive up and this is impulsive down, then this could be wave A, wave B, and you could get a move up here, but it might just be wave C of the correction, and then it could end up moving lower. What I like about this one, the reason why I'm spending some time on this, why it jumps out at me is because whether it's this is the correction, it's starting that new uptrend, or a new burst upward, or if this is just if this is impulsive down and this is correct. And what I'm talking about here is if you have impulsive, corrective, and you get impulsive up, and if that is impulsive down, then what should happen is you get corrective back up and then down. It starts to reverse the pattern here. And that first move up would be wave A, wave B. We call this a bearish ABC pattern, setting up for another move down. And that's kind of what I drew out right here. But either way, in the near term, out of both those scenarios, by the way it's acting right now, you should at least get a move up. If it's just part of the bearish correction for a bigger move down, it might be just a shorter move up. If it's starting a bigger move up, then it's a bigger move up. But there's a high probability the stock moves up in the near term, and you combine that with the spike in volume down here, there's probably a really good chance. It's not really confirming that today, because it's coming down a little bit here today, but if you want to kind of watch that and see how it plays out over the next few days or so, see if it does make that move. I like these type of trade situations because they give me, especially if I'm bullish in this context here, because it give me a high probability that I should at least get that little bit of a move right there. Could be a big move, or it could be just a real small move. Now, the key, what would also be key, is this low right here, because if you got in expecting that move and it kept dropping and it dropped below that low, it would wipe out all that scenario. You're in a downtrend and you just went to a lower low. You had a lower high right here and you went to a lower low. It's acting like a downtrend, and that would be part of managing the trade. Is recognizing that's a key spot right there. All right, let's see if there's, yeah, and again, you're looking for that real subtle, at lower highs, lower lows. Here you had a little bit of a pullback right here, so you have a little subtle higher low, higher high maybe. You're getting a big volume spike. Are you kind of coming out of or starting to move into a right side of a bull move right there? DTEA, that's one to keep an eye on. This could be in a little bit of a flag or pennant pattern, a little bit of a pennant pattern right here, but there's the burst. It's been consolidating. And again, let's take a look at that volume spike, because there's a real small volume. This has had some bigger volume spikes. It did have 100% from the day before, though, yesterday on this little move up. Maybe there's some, and keep an eye on that. If you start seeing that bump up a little bit, someone's buying. All right, let's see. Maybe I find one more. Let's see if we can find one more. While I'm looking for one more, just to, I'm not spending the time on all these scans. What I don't, let me rephrase that. What I don't want to create by going all these scans is create a situation where you're spending hours feeling like you have to go through all these scans every day to try to find the perfect stock. We're never looking for the perfect stock. If a perfect pattern falls in our lap, great. But I think there's a danger sometimes in thinking that, and this is what happens a lot, particularly with newer traders, is that they feel like there's a perfect scan that's going to always be right. They're never going to be wrong. and they keep and when they find what they think is the perfect scan, and then it doesn't work, or it doesn't work for a few trades, and they go start to look for a new one. They're on this endless quest for perfection, or for the and they do this with gurus too. How many of you have gone from different trading programs out there? You know, you're trying to find the guy that is never wrong, and he's got the perfect system and the perfect software program. Hopefully right now I can save you a lot of money in your trading career by saying, you know, there isn't one. There is no perfect system. There's no perfect trader out there. Everyone has to deal with losses, and they're going to be wrong, and their system isn't going to work as well in a certain environment as it does in another environment. The key is to embrace that. Embrace the fact that you cannot know exactly what the market's going to do or what a stock is going to do. And the purpose of going through all these scans is not to make you feel like you've got to go through all 21 scans every day. And not to mention that, but go through your sector analysis and find the 98 strength rank, perfect 98 strength rank going from hold to buy or something like that. But to just give you some different ideas. And like I said, I don't spend a lot of time on the fundamental scans just because that's not a big part of my trading. But if you do, they're there. And if you've got a particular one that you really like, then it's made your trading day a little bit easier, because you can just go to that scan, and when it has stocks that look really good to you, then you can use it. In other words, the whole point of the software is to reduce the amount of time you're analyzing, not increase it. And so now you might have to put a little bit of work in early on. You might have to go through and follow maybe take one of these scans each week and watch it. Watch what happens with some of the stocks that are in it over the week or what have you. But maybe find 2 or 3 that you really like, and I would even add that when you do go through some of these scans, is try to just stick to, maybe make it a rule of thumb where you try to just only look for the 90 strength rank and above, to where you're not dipping down too much in strength rank, sacrificing much in strength rank, and finding some of your trades. And part of it too is being able to recognize the chart patterns, and that's part of what I'm trying to do with spending all this extra time looking at some charts, is teaching you some little subtle things I see on a chart: higher highs, higher lows, that bowl-shaped move, ABC patterns, impulsive corrective. By the way, there's trainings on all these that you can go and access. Probably the simplest way to access past trainings is you can go to YouTube and type in Traders Pro, and you should be able to go back and review a lot of the past trainings. But the quicker you can get that skill down of recognizing those chart patterns, you don't have to spend a lot of time looking at charts. I can go through any of these scans in a minute or so, maybe not the 1600 chart scan, but because I know exactly what I'm looking for as far as the chart pattern. And you have to put in a little bit of that work early on, but then it speeds up your analysis time down the road, where you don't have to spend much time looking for trades. So anyway, try those out, and hopefully they work well for you. You find one that really works well for you. That was the purpose of setting them up, and go from there. All right, thanks everyone. Have a great weekend, and we'll see you Tuesday for the next market update. Bye now.